A pleasant day to all the guests, audience, fellow speakers, and the organizers of this year's National Microinsurance Forum. My gratitude and felicitations to the officers and members of MiMAP Limansi for the well-received invite. I would also like to acknowledge Ms. Emeteria F. Quijano, President of MiMAP Limansi, and of course Mr. Jun J. Perez, Executive Director. I hope that you continue to lead your organization in promoting the further development and innovation of our country's microinsurance sector. Insurance has been proven to be an effective tool in mitigating an individual's costs and expenses stemming from unforeseen events and other incidents of unknown peril. To cater to the needs of the low-income and marginalized sectors, microinsurance and other microfinance instrumentalities were introduced, providing the protection and benefits similar to that of regular insurance, but at a lower cost of premium. This has been instrumental in securing the financial stability and promoting financial inclusion among our countrymen. Back in 2019, Undersecretary Gil Beltran of the Department of Finance had expressed the government's aim to cover at least 50 million individuals with microinsurance by the year 2022. At this moment, I am pleased to pronounce that this vision was fulfilled 2 years earlier, as the number of lives covered by microinsurance have surpassed the 50 million mark as of the year-end 2020. This achievement serves as a testament to our continued efforts in reaching out to our fellow Filipinos and the relentless commitment in building a financially inclusive society. Yet, we could not turn a blind eye on the adverse effects of the pandemic and the challenging economic conditions. For the past years, the insurance industry has been through many ups and downs, but one of the greatest challenges has been this COVID-19 pandemic. Considering the unprecedented times we are in, the Commission provided regulatory relief to allow respite from the impact of the pandemic. One of the challenges that we face in the onset of the pandemic is the resulting lockdown and travel restrictions. Insurance companies and other IC-regulated entities had to close their offices for quite some time. This affected their preparation of the documents and reports due for submission to the Insurance Commission. Needless to say, the business disruption also affected their day-to-day operations and transactions. In answer to this, the Commission had required the online submission of reportorial requirements from our regulated entities. We also adjusted the deadlines for the filing of necessary reports in order to give companies more time to process their documents. As we gradually learn to live with the so-called new normal, our regulated entities and the Commission had adopted work-from-home setup and other alternative work arrangements in order to keep the operations going while still adhering to the basic health and safety protocols. In March 2020, immediately after the crisis hit, we issued Circular Letter number 2020-21 to put on hold the issuance of cease and desist orders for companies who fell short of the 900 million minimum net worth requirement, which took effect on the end of December 2019. The Insurance Commission, however, still monitors the insurance company's financial condition on a quarterly basis and will not allow companies to declare dividends when they have not complied with the minimum requirement. Another challenge is the applicable taxes for non-life microinsurance products. In view of the limits that MBA products can be sold, they usually partner with a non-life microinsurance provider to design and sold products for the needs of their members, which can be insured only by non-life based products. The tax rates applicable to a regular non-life insurance product is also strictly applied to non-life microinsurance product. If this matter cannot be addressed, it is possible that there will be few microinsurance providers in the non-life sector that will offer this product. The Insurance Commission also recognized the effect of the pandemic on the liquidity of consumers and companies. The Commission released Circular Letter 2020-18 to encourage insurance companies, HMOs, and pre-need companies to provide their policyholders additional grace period for the payment of premiums. In addition, Circular Letter 2020-58 provided regulatory relief on the admittance of premiums over 90 days due in the computation of their net worth. Aside from travel restrictions, social distancing measures also limit our mode of interaction with our customers and stakeholders. The traditional face-to-face selling of insurance products became impracticable. As a solution, the Commission had allowed the remote selling of insurance products through the use of video conferencing and other technologies that support remote communication. Recognizing the benefits derived from this, the Commission institutionalized the remote selling as a permanent mode of selling insurance products. Moreover, insurance companies utilize the online insurance market to distribute their products. Several insurance companies launch their products through their own e-commerce platforms. Some forge tie-ups and affiliations with online marketplaces such as Shopee and Lazada, and mobile wallet apps such as GCash. In terms of reaching the masses, the significant growth in the use of smartphones and other mobile devices provided an opportunity to deliver cost-effective financial literacy campaigns. Mobile phone-based insurance, or simply mobile insurance, has become an emerging distribution channel for microinsurance. Truly, we can say that technology has played a vital role in promoting financial inclusion among the people. But there is also a downside with the increased digitalization in the insurance industry. Going digital and the use of insurtech innovations in creating microinsurance products is a rosy opportunity to be explored. But it will be a challenge, especially in the far-flung communities that lack the resources to support digital communications. We should take note that the use of technology must match the technological skills and resources of the target market. For instance, the online payment of premiums could be a big convenience for clients covered by microinsurance and other simpler insurance products with small premiums. But online collection of premiums can be a challenge when applied to customers who do not have bank accounts and other saving instruments. The question on accessibility by our fellow Filipinos still remain as an issue to be addressed. Also, the increased use of mobile devices and digital platforms exposes us to cybercrimes and infringement of data privacy. Thankfully, the Insurance Commission has not yet encountered any severe data security incident as of this date. We strive to protect our data by regularly assessing and monitoring the security measures we have implemented on our system and hardware equipment. To protect our regulated entities, the Commission issued a circular directing our regulated entities to strengthen their cyber defenses, while reminding them to comply with the Data Privacy Act provisions, such as the implementation of privacy and data protection measures and data breach reporting. On IFRS 17 and evaluation standards, amidst the challenges of the new normal, the Insurance Commission still persists to provide sound regulations and policies that will secure the financial integrity and position of the industry. Recognizing the need to update the industry's accounting standards, the Commission has committed to implement IFRS 17 with the current pandemic. Complying with this new standard would be extra challenging for our regulated entities. As a remedy, this Commission, through Circular Letter 2020-62, provided an additional 2-year deferment from the date of implementation of IFRS 17 given to the insurance companies, which falls on January 1, 2025. In view of the deferment on the implementation of IFRS 17 for MBAs, the Commission requires the MBAs to implement the Gross Premium Valuation, or GPV, for valuing life insurance policies starting January 1, 2025. A draft circular letter on the new Financial Reporting Framework, or FRF, for MBAs was already drafted. The same was exposed to the industry for comments and feedbacks through Advisory Number 2021-11. As of this date, the Insurance Commission is currently consolidating all the comments and inputs received from the industry for assessment and consideration. With regard to the valuation standards for MBAs, the Commission, through the Actuarial Division, is currently drafting the circular letter for the said valuation standards. The Insurance Commission is looking forward to expose the draft circular by the first quarter of this year. On the matter of regulatory measures relative to Typhoon Odette, aside from the challenges of the pandemic, just before the year 2021 came to end, our country has been faced with another crisis situation caused by the onslaught of Typhoon Odette. The catastrophic event claimed the lives of at least 208 people and caused approximately 308 million pesos in infrastructure damage. Given the extent of damages and the loss of lives and properties, the Commission had anticipated the possible increase of typhoon-related claims on insurance companies, MBAs, and other entities regulated by the Commission. Hence, the Commission had issued Circular Letter 2021-71, providing the guidelines aimed at strengthening the management policies of claims related to Typhoon Odette. This recent circular enjoined all IC-regulated entities to relax and streamline their company procedures and mechanisms that will facilitate the immediate processing or payment of claims related to Typhoon Odette. The issuance also calls for the relaxation of the notice of claim period and the period for the completion of claim requirements. Lastly, we urge our regulated entities to enhance their services that will improve overall customer claims experience. What now are the prospects for this year and beyond? These recent years were indeed very challenging period for all of us. We are set to welcome the year 2022 with hopes and aspirations, but then again, new challenges came to us with the current surge of COVID-19 cases due to the Omicron variant. But we remain optimistic that the industry will continue to be resilient and responsive to the needs of its clients and stakeholders. We would like to thank our industry partners and regulated companies for their active response in helping our fellow Filipinos amidst these trying times. For 2022 and beyond, we are set to continue our efforts to help the industry sustain its progress and to further uphold the resilience and integrity of the industry. Certainly, it will still involve our collective efforts to spread information and awareness about microinsurance and other financial instrumentalities in general. Together, let us put our work on building a better and brighter future. Thank you to all of you. Mabuhay po tayong lahat.